Hi, everybody. It's Jessica Stone, along with Scott Garliss at Stansberry Research. He's the editor of the Stansberry Newswire and one of our senior analysts. We wanted to talk about a real dichotomy that we're seeing in the markets here on Thursday. The day started with a record number of jobless claims reported. 3.28 million people said they're going to lose their jobs, and that is 5 times the number that reported the same at the height of the last recession. So a huge number, and yet we're seeing the stock market rally. What's going on, Scott?
Well, Jessica, there's a really interesting market dynamic going on, and it began last week. It began with options expiration, and that is the expiration of futures and options contract. It happens once a month, but the one last Friday was very interesting because it was end of quarter. What's going on here is that dealers were hedging a lot of bets going on into the end of the quarter because of the sell-off in the market, so they were very short. And then with that options expiration, all of this unwound. And now on top of that, you have another interesting dynamic coming into play, and that is pension fund rebalancing. Pension fund rebalancing happens both monthly and quarterly. So with the end of March, you have a quarter's end and you have a month ending. So there is going to be even more buying because of what's going on. And the way to think about this is, a pension fund manager has a mandate to say be 55% in stocks and 45% in bonds. But when the stock market has sold off like it has, and bond market has done pretty well, what happens is that weighting gets out of whack. Stocks drop, bonds go up. So the bonds become a bigger part of their portfolio, while stocks become a lesser part. So they have to get that back into balance. They have to get back to that 55-45, and it may have dropped to 50-50. So they have to buy bonds and sell stock.
So all of the activity we're seeing on Thursday is really not a reflection of what happened with the unemployment or the jobless claims. It's really a reflection of the rebalancing of these portfolios and the reaction to what happened last week.
Correct. So they have to do this going into month end. Now, will it end exactly with the 31st of March? No, it'll play out longer. Twice before, we've seen numbers not quite as large as what estimates are for this month, but somewhere in the neighborhood. So for this month, there are analysts estimating 150 billion worth of stocks to buy. I've seen some as high as 300 billion worth of stocks to buy.
So that would continue to see a market rally going forward through the coming weeks. It's nothing to do with the fundamentals of the economy and what we're facing with the coronavirus crisis.
Correct. So this is a dynamic that most people would know about, again, unless you paid Wall Street brokers millions of dollars a year in research funds.
Scott Garliss, thanks for bringing it to us and explaining it so well. We appreciate your time. And if you would like more content just like this, please subscribe to our YouTube channel and also follow us at Facebook, Instagram, and Twitter. Thanks for joining us.